Hello everyone, it's Evan here from the Trade Risk, and this is your stock market weekly update for Friday, December the 22nd. I'm a little bit pressed for time today, so we're going to keep things a little bit tight and short. We're going to jump right into the charts here to kick things off. Before we get too far, though, I just want to say Merry Christmas, Happy Holidays to everyone. Markets closed on Monday, so we have a short week ahead of us as we very quickly wind down the year here of 2023. It's been an epic year. Let's take a look at the numbers. If we look across the 1 week change column, it was another outperforming week here for the Russell 2000 index. It is up 2.25% now this week and up 13% over the past 1 month. Everything else was green. Dow Jones was the laggard this week, up only 30 bips. And if we take a look at volatility, we did close higher across the board this week. So stocks up, volatility up. Sometimes that piques people's ears when they hear that. VIX up, S&P up, and we did have a flare up in volatility this week. We saw a sell-off, pretty brief. In fact, you can see here on these 5-day line charts, take a look at the vertical down on Wednesday of this week. We saw a pretty sharp sell-off, but there was no follow-through. We'll talk about that in just a moment. Let's take a look here at sectors. Communication services, top of the list. Energy, healthcare, rounding out the top three. There were 4 sectors in the red: utilities, real estate, staples, and financials. Financials and staples basically flat, but there you have it. Most things mostly around flat this week, with communication services being the standout. Every sector here in the green over the past 1 month. If we take a look at our custom smart trend filters, every sector on the daily chart minus utilities is in an uptrend, or at least neutral. Staples kind of neutral to uptrend, but it's just utilities now that are starting to roll over here in terms of sector breadth and trends. Latest here is XLE uptrending as of the last handful of days. Now, if we take a look here at market breadth again, you can see for bullish evidence, we are still getting more weight here stacking up for the buyers, for the bulls. You can see we still got outpacing a flare up here of number of stocks hitting 52-week highs across the NYSE. We're still seeing a very kind of doldrums low end here for stocks hitting 52-week lows. That ratio is still skewed very much in the bulls' favor. Moving averages, again, all still in their uptrend, kind of frothy overbought states for stocks above a 50 and 200 SMA. Now, if we take a look here at IBD's list, so shout out to IBD. They are a sponsor of the show. You can get access to their offer in the link with a link in the description of this video. You can see it was actually kind of a mixed bag here. This is their IBD 50 top 10 stocks ranked top 1 to 10. And you can see it was a little bit of a mixed picture, still mostly positive. These stocks have had some big moves over the past 1 month. You can see lots of double-digit gains, some upwards of 20, 30, 40, 50%. So it's been an impressive run for a lot of these stocks, but a little bit mixed there on this week's action. If we take a look at commodities, you can see natural gas getting a little bit of a rebound, but it doesn't mean a whole lot considering it's been beaten into the ground almost all year. In fact, take a look at the 1 year return here for UNG, down 70. That's 70% for natural gas. Been very painful there. It's the UNG ETF anyhow. And if we go down the list here, you can see agriculture and UUP down sharply this week. Not as bad as that. It wasn't, in fact, a 6.6% drop here for the dollar index. That was I believe, a dividend getting paid out. So a little bit of sort of a skewed chart there. Not as bad as that percentage is showing. If we take a look here at the yields themselves, you can see no big movement happening this week. You can see the 30-year index was up a smidge, but everything else was kind of down. So still getting kind of favorable. No big changes here in terms of, kind of lower lows, lower highs here for the Treasury yield index. Let's get into some of the charts now. As we've been talking about here for the S&P 500, it has really just been a bullish stampede here. Really hard to find bearish evidence beyond the fact that maybe things are just too complacent now. I mean, that has kind of been the biggest con here about this market, or the negative aspect of this market, is maybe there's too much complacency, but it still isn't quite moving the needle. I don't think we're complacent or euphoric is enough as of right now. You can see we did have a very aggressive sell day here on Wednesday. So Wednesday, the S&P was down 1.5%, very sharp. It was started around 2 p.m., kind of a sharp sell-off that just cascaded lower. I know there's a lot of zero DTE options kind of affecting those flows on Wednesday. But I think, you know, if you were a bear here on Wednesday, this was your spark to potentially kind of roll things or cool things off for some time. But notice on Thursday, we got no follow through to that selling. In fact, it was just an inside day. We gapped up, we traded within Wednesday's range. And then on Friday, we sort of followed through-ish, not really, just kind of a doji candle there. So some indecision as stocks moved back up towards their highs. So, you know, when we look to next week's action, again, it's the end of the year. It's going to be lower volumes. It might be a little bit sleepy here, but, you know, it's worth monitoring how stocks react around the highs made on Wednesday. This was ultimately now the turnaround day, right? So a marker you can make here on Wednesday's action. Can the S&P 500 get above Wednesday's highs on a closing basis? I think if you do get that, then, you know, bulls are just fully firmly back in control. If we do roll over here hard, particularly like we saw on Wednesday, then maybe you've got the ingredients of a market that wants to take a longer breath. So right now, still the buyers, despite Wednesday's sell-off, still buyers are in control here. Uptrend is in place, and we are very quickly getting closer to the all-time highs for the S&P 500 back in 2021. We're just about 1% or so away. So that's the action there in the S&P. A little bit of turbulence, but bulls managed to land the plane. If we take a look at the Nasdaq 100, once again, the Nasdaq 100 did break out to new all-time highs, and then it sort of rejected here on Wednesday, didn't get the follow through Thursday, and then kind of meandered here on Friday. So really similar comments apply. It's possible we're carving out some type of trading range here for the, you know, kind of turn of the new year perhaps. But if we start to get more closing fresh highs here above, call it 410.25, then off to the races we go as new all-time highs for the Nasdaq 100. Keep an eye on that level though as we go into next week. And the Russell 2000. So this was kind of the, you know, story we continue to hammer on here, is just that rotation, the flare up here, and the squeeze happening in the Russell 2000. You can see that it was up 2.25%, again leading the charge now for 6-7 weeks in a row. You can see that it had that violent kind of turnaround day here on Wednesday as well, gapped up on Thursday, and a little more convincing follow-through action on Friday, although still closed off of the highs. And again, for the Russell 2000, let's throw this on a monthly chart. Let's clean this chart up. You can see now for a monthly basis, again, the month's not over. We still have a week left of trading, but you're going on potentially going to be the highest close here for the Russell 2000 in about almost 2 years since what is this, March of 2022. So looks like this consolidation is starting to shape up in a positive effect. Now we're not quite there yet, but we're still kind of at the top end of this range, but so far the squeeze is continuing. So Russell 2000 looks good here, and let's move on to a couple of other markets. VIX, as we talked about here, did get a rise this week, so it was up almost 2 points. So it was up around 14.25, but you could see that started to roll back over. So we still ended up with a positive week for stocks, positive week for volatility. If that continues for a longer period, maybe we've got something to be short-term concerned about. Maybe a little bit of evidence here that's not so kind for buyers going into the next week or so. But I still think with everything else going on, with small caps outperforming, breadth improving, buyers stepping in on dips, is still a lot of evidence right now on the buyer on the bull side. So VIX, we'll keep an eye on it, but it was up this week. Gold, I think, is worth noting because gold, very similar to the action on Wednesday, right? So very similar to the action on Wednesday, gold experienced that action about 3 weeks ago to kick off the December month. If you recall, we talked about this ugly rejection week here, right? Where gold was down 3% just after making new closing highs here for the GLD ETF. You can see it came with an abrupt sell-off, and we said, well, maybe the breakout isn't quite ready to get into motion yet. And if we look here at how everything followed up, we got no follow-through selling last week, and now we got more follow-through sort of buying this week. And here we are again with gold knocking on those all-time closing highs. So GLD trend has been saved, back in action, momentum building. Again, we did fail a bit here to hold on to the highs of the day on Friday, but I think you still need to be fairly encouraged here on the GLD action. Silver, a little less encouraging. You can see kind of the negative, a little more of a divergence here. Hasn't quite got back up to those highs, kind of like gold sort of tested here towards the end of the week. So gold starting to shape up again. And then finally, if we just look at TLT, you can see again, it didn't really do a whole lot this week, but it is kind of carving out a little bit of a range here. So I think, this is another place we can start to look is if, rates start to rise again, if we are seeing some type of short-term top in the TLT, or better yet, the IEF, then maybe that is another reason you could get at least a temporary kind of pause, break, sell-off in equities as a whole. So we'll keep an eye on some of these ranges that are developing over the short term, but generally speaking, the uptrend is still very much intact off of those October lows, November lows in treasury bonds. So that's it. I'm a little bit pressed for time here, so I'm going to leave it there. Hopefully everybody had a good week riding the wave higher here, and most importantly, I hope everybody gets to enjoy a nice holiday time and season's greetings. So thanks so much, as always, for tuning in and watching. We'll be back next week to round out 2022. Hopefully everybody has a great week ahead. Take care and see you soon.